Chasers! If you have a parent who will be leaving you an inheritance in the future, did you know, under certain circumstances, you could inherit their superannuation completely tax-free? Today's episode is about the world of superannuation and inheritances. So listen up, because this might mean tax-free cash for some of your adult children out there. I'm your host, Chris Becks, a financial and business advisor with over 40 years experience and the founder of the multi-award-winning CBEX Business Solutions for Good. And because this is a financial planning topic, as an authorised representative of Interprac Financial Limited, I'm obliged to give you this general advice disclaimer before we begin.
The information provided is for educational purposes and is general advice only, as we did not take into account your investment objectives, financial situation or particular needs. Before making an investment decision on the basis of this advice, you should consider how appropriate the advice is to your particular investment needs and objectives. You should also consider the relevant product disclosure statement before making any decision relating to a financial product. Chris Becks is a director of CBEX Financial Solutions and an authorised representative of Interprac Financial Planning Proprietary Limited, AFSL 246638.
Now that is done, let's dive into this episode. Your adult children inheriting your superannuation tax-free? Now, this all might sound too good to be true, right? Well, hold your horses. There are some hurdles to jump over, but we're here to explain them in a way that hopefully won't put you to sleep. All right, so how do you qualify for this tax-free inheritance? It all hinges on something called an interdependency relationship with your parent. Now, this might sound complicated, but it basically means you and your parent had a close bond and looked out for each other. There are 4 elements to consider that determine the interdependency relationship. Number 1, a close personal relationship. This isn't about romance. Think strong emotional support and a shared life. Even if you didn't live together, regular phone calls, outings, and deep conversations can all count. Number 2, living together. Sharing a roof is key, but it can't be a temporary situation. Think shared meals, cleaning, and creating a life together, not just splitting bills. Number 3, financial support. Contributing to household costs shows you supported each other financially, even if you are both independent. And number 4, a domestic support and personal care. This is about helping each other out from grocery shopping to medical appointments. Basically, being there for one another. Now, just saying you had this relationship isn't enough. It's all about what you can prove, and this fact highlights the importance of documentation. Dates, receipts, details about shared activities. The more you have, the stronger your case. There are a few players involved who decide whether an interdependent relationship exists. First, the super fund trustee will make an initial call. If it's an SMSF or self-managed super fund, they'll need detailed evidence, almost like building a legal case. But wait, there's more. The final say comes from the tax commissioner. He can disagree with the trustee, so having a strong case with documentation is crucial if the ATO begins circling you. So what can you do? The first thing is to look at getting a private binding ruling, which is a preemptive ruling from the tax office on your interdependency status. Second option is to pay and object. The trustee pays you assuming no interdependency, then you file your tax return with that assumption. And if you disagree, you can object later based on the interdependency relationship. This all may seem complex, but remember, tax-free inheritances could be on the line. As with any financial planning or matters relating to tax, to ensure a smooth transition and make informed decisions, always get some advice from an expert before you do anything. It's good insurance against a costly financial mistake. Remember, knowledge is power, especially when it comes to super and inheritance. Don't miss out on potential tax savings. If you'd like more information about how your dependents could receive a tax-free inheritance, call our office today on 0355 612 643 to discuss your options. Thank you for listening. I'm Chris Becks, and I look forward to presenting another episode to you real soon.
If you enjoyed this episode and you'd like to help support the Chasers channel, we would love you to share it with your business friends and colleagues, post about it on social media, or leave a rating and review. To catch all the latest from CBEX Business Solutions for Good, follow us on Facebook at facebook.com/CBEX, Instagram at CBEX, and on the internet at cbex.com. Thanks again, and we'll be sharing new info with you on our next episode.